Hey traders, so today I want to talk some fundamentals. Now, normally I am purely technical in my trading, but I do follow crypto and I have been for many years, and I am always very interested in some of the fundamental driving factors. One of the stories that everyone tells themselves is that Bitcoin is being affected by the inflation. In other words, people are afraid to hold dollars because they're going to be inflated away by Fed interest rate policies, which the dollar is. It's no secret that just since the COVID crash back yet last year, the dollar is down, almost 10% relative to other currencies. Now, we haven't seen that in the CPI, the Consumer Price Index, which is what they use, the Fed, to gauge inflation because the price of food hasn't gone up, the price of gas hasn't gone up that much. So it's not really seeing its effects in the wider economy. It's just we're seeing a lot of that money going into asset prices. We're seeing that going into the stock market. Because what companies are doing is they are taking out loans at these very, very low interest rates. And they're using those loans not necessarily for growth, but oftentimes, like I know in the case of UPS in particular, they've used it to pay this year's dividends. And so a lot of the money that is being taken out on debt is being used to return money to shareholders instead of grow these companies. And we think that Bitcoin is somehow a unique snowflake, and it is not subject to this. But let me show you a few things. So, this right here is an article that I saw linked to me talking about this value investor, Bill Miller, buying MicroStrategy debt. Now, what's interesting about this is that they purchased a 0.75% yield convertible bond. Now, I'm not going into all the details of convertible bonds because they're very complicated products. I don't fully understand them, but basically, he's taking out $650 million at about 0.75% interest rate. Now, why would you want to take out something that's such a low interest rate? I mean, it's a little bit better than putting your money in savings. Well, they're convertible bonds, meaning he has the option probably to convert them into shares of MicroStrategy. So that's the advantage for him to do this. But the kicker is this: how is he able to get all of this money? How is he able to get all this cash at such an incredibly low interest rate? Well, that is because we live in a very, very low interest rate world. The Fed's policies of low interest rates is reverberating across the economy. The Fed's not going out and buying Bitcoin, but they're creating the environment for these hedge funds to take on really cheap money and then put it into assets, including Bitcoin. And a lot of people for that throughout the years have been really excited to hear about institutions investing in Bitcoin. But I'm here to tell you that's not such a good idea. The reason is because eventually, interest rates will have to rise. Now, I'm worried that it may come as a panic with a sudden shock of inflation, but by taking out these loans, basically, and buying more and more on this debt, like the second article link talks about, where they've kept on buying through the 30s, and their average is at about $16,000 per coin. This is going to be an important number, by the way, for you to understand where some of these hedge funds might start to get squeezed. The point is, now that Bitcoin is being bought on debt financing, it has become sensitive to interest rate changes. Not directly, but I would not be surprised. In fact, I'm going to be looking for it. For when the Fed starts to raise interest rates, instead of going up because people think that, inflation is happening and they need to put it into crypto, I think it's going to have a negative impact on the crypto market as a whole. This is the unintentional, undesirable consequence of mass adoption. it's now tied to the rest of the financial industry. It's a risk asset. And one way that you can actually see that is to look, spell it. There we go. You can look at the correlation. Bitcoin has become rather interestingly correlated with the S&P. It's at some sort of a almost a 0.9% correlation, because as people feel like taking risk, that's where they're looking to take it. They're chasing returns. And so there's only a few places that you can really get it. You can't get it in bonds, but you can get it in the stock market and you can get it in crypto. So beware if the Fed does start to raise interest rates. You can't just think that because you're in crypto, you are immune to this very impactful fundamental force in the market. We'll see you guys in the next video.